Yo, so good afternoon from England. You see my screen, I'm just in a trade at the moment, which is on my demo account. I've already traded today in the Asian session. But the premise of the trade, before we go into just some basic teachings, is that in the morning, if you look, all this liquidity here, we swept up. And we come back down into first presented fair value gap. Okay, it's the first presented one because it's the first one with displacement. These are very little. Got one meaningful one. If you can use this one, that's fine too. But it's come back down into that. So if you were short here, take profit here. And then what it's indicating is, as well as my knowledge on like weekly sort of how it frames in the week. So you've got Monday here. And then coming into Tuesday, low of the week. Yeah. And then we're bullish for the rest of the week. For my entry here, this is because I just turned up at the chart at 2 o'clock. Why is my kill zone? Oh, it's after PM session. So PM kill zone at 2 o'clock. So if we're going higher, we're just trying to run out all the shorts from the morning. Yeah, we might eventually reach up into this. So I was looking at this here. Smart Money offloaded their positions here. Okay. Smart Money entered down here. So yes, even though these are lows, Smart Money's there and there. Everyone in New York pre-market got run out. Smart Money entered. Smart Money runs up, tags the liquidity, standard deviations higher, comes down, takes their profit. Then we're running against everyone in the morning who still hold their trade thinking we're going lower. So more specific into the entry, at 2 o'clock I look at the New York session. I highlight this zone here. So there's like you look deep in, you have a fair value gap. Well, there's two overlapping each other, so I just include them both. And then price hits that, comes down, hits that. So then what you have, relative equal lows here, relative equal highs here, plus this one, relative equal highs. So it's almost like a triple top. Retail traders will be looking at that as resistance to go lower. But I'm looking at where their orders are, which is above here. Liquidity, liquidity, liquidity. And the next liquidity is up here. Got this imbalance as well. So yeah, I entered down here at, look at my time, 2 o'clock. So 2 o'clock, you've got first presented fair value gap. It broke this high here from that fair value gap. Entry. Entry here. And again, comes up, uses that, comes up, fails to get down to it. Could enter here as well. And up. Okay. So now I can move my stop lock in a bit of profit. If you're looking at risk to reward, we go, even that's a 3-to-1 that I had on. 3.34 to 1 if I took profit now. Again, that's like a day's wage for most people just in the space of 20 minutes. We got that. Admittedly, it's on a demo account, so that's why I like to, when I trade live on with my own Apex accounts and stuff, I like to do that so I can concentrate on my own. But I will start live streaming it as well, to be honest. I'm trying to get people to join this chat, which is my next goal. Pardon me. And again, just showing you how so people don't think you can time the markets. So literally the markets are run on time and price. When the two, time and price, meet each other, it's like here, for example, 1, 2, 3, 1 in close proximity here. So you've got, well, 3 highs. Yeah. But again, you've got to look where price is jagged. You don't want to trade to jaggedness. So it's jagged. It's jagged. It's smooth. That one's in a trend line. Okay. I look at every candlestick as information. Again, there's no PGRs I know about here. You got that, that's a 6-to-1. Because you've got a fair value gap here, order block there, the black candle. Let's just move the stop up. Yeah, I'm just watching to see if it can hit the target. So I'm just purposely just trading this video just to live stream to people if they want to see what I'm up to. We're hitting a key level, 350. And again, like relative to here down to here, that's a dealing range. So premium discount below 50% of that range from high to low. Let's have a look. Let's just clean the chart up as well. I like having the levels on there to show you what I was looking at. But just want to get that exactly on the low and exactly on the high. Other bodies respect 50%. And again, okay. You see fair value gaps form on 25%. Similar to the last video I looked at. 50%, another fair value gap. another fair value gap. So let's just see if a fair value gap forms around about here. ICT honestly is life changing. Like my life's not completely changed yet, but I know it's gonna be life changing stuff. And this is my life goals, my life dreams is to succeed at this. And I feel like I'm on the path to doing that. So new day opening gap comes up, touches it, through it, starts respecting it, can't reach it, macro time, entry, higher. I want to see where the next fair value gap forms because it can give me ideal projections in price as well. Like, for example, you have 15 seconds. If this is one, then I might think, right, move that down, target that like that. 75. And you've got fair value gap. I like to line the fair value gaps up. Fair value gap, fair value gap. Like, and again, they don't have to be dead on, but it is beautiful when they're like dead on the quadrant levels. Notice how there's no real inefficiencies here until we get up to this one over here. It looks good. If you're in the chat, you trade, please like. And again, people, they say ICT stuff doesn't work, but it does. But you have to know price moves from liquidity to inefficiency to inefficiency or liquidity. Yeah, it could come down or not, but we've got our entry below 50% of the range at 2 o'clock, so that little run up here. And again, we're just And that stop below this fair value gap. That's the last clean PG array. You like to see symmetry, so when one side goes like this, you want to see similar jaggedness. Don't trade into the jagged. Some days like this, things just click, and you just think, I know where it's going. It'll never be 100% guaranteed, which is why I use a stop loss, trail it as well. How it just touches that 75. Just touches it. Oh, sorry, my bad. And then trades higher. Yeah, I'm just locking in profit. Again, my goal is to stack up all these prop firm accounts. Trade them all. So just a long process when you get started to stack up the accounts because you've got limited capital and stuff. You don't want to buy like say 10 accounts at once. It's just like if you need to prove to yourself you can get the withdrawal. So you start with one. When you get one, you get two. You use the money you're making to reinvest into the prop firm challenges. That's my approach to it. Again, 75%. That's touching it. And these are like imaginary levels that I've drawn. Imaginary here. I like how I go imaginary. As if they don't exist, but they do. Just come down through it. 1 sec, I'm on the live stream. I'm on the live stream. No, thank you. I'm back into that fair value gap. Sometimes it's not a smooth run up. I mean, I'm just locking in small profits, but if you don't want to, that would be fine. Like, I'm just locking in that profit. So I'd use this as an inversion fair value gap as it comes up through it. I'm just going to lock in that profit. I'm still not taking the stop out, or is it being so funny about it? Just take me. Take my stop. That's why you always have your candlestick. If there's 3 candles, always have it below candle number 3. Go on. I'm almost like wanting it to take a stop loss just to like get out, take the small win. That would have been a what? 2 to 1. Would have took me out that. I still think it's going up, but I'm just locking in profits as we go up, and then I can re-enter in a minute. Just making people trapping in short sellers, you see. There we go. So a 2 to 1 now. Just wait till 3 o'clock. So let me just check my original entry. Again, you can't always get it completely smooth straight up, yeah, you gotta allow some retracement. So like, I'm happy with the 2 to 1, which is why I took it, but if not, I could have stayed at break even, let this take a bit of heat into the trade, and then we go up again. So this key level here, where are we? Again, maybe my stop loss was too close, but I'm locking in the 2 to 1, so you can't complain. Again, I want this to trade through it. And as it does that, I can use the low. 1, 2, 3. Sorry, 1, 2, 3. Use the low of this candlestick as a stop loss. Again, you're probably looking not entering just yet because it's not a macro time. So every hour you can take trades really, if you know what you're doing. Do you know what's really annoying? Well, everyone's like, you need to have a mechanical model, X plus Y stuff, but like, you need to frame trades around liquidity, bias, etc. Again, here we go. As it gets above, I'll enter again. It does it. Might wait till 3 o'clock, but we'll see. It's enticing people to go short. See, like that's why you get out the trade at the right time. In case it decides to come down. In my mind, this is just a fake out, meaning it's just fake. So if you to remove to drawing, we're at premium in the dealing range. Look at the 50 fair value gap. It wants to get there. doesn't want to reach the 50. If you've got like another dealing range from here just to here, fair value gap here. Again, you're confident. I wasn't confident in this short because there's no real inefficiency that I spot that it's reacted off. Maybe. Yeah. But we're bullish, yeah. Let's take another check just to show you executions. Yeah. Here to here. Took a trade from here down to here, and then I took a loss, small loss on my demo. I'm just practicing as well. But then that was when I just kind of clocked on really that we're not going lower for the day. I was kind of targeting these lows, but in hindsight, it just tapped the liquidity. So I was aiming too far. This original trade here as well, I was aiming too far, thinking it could take, but then I'm looking, smart money's here, because it's taken off all the people in the up trade. So I was wrong to presume it's coming all the way down. But again, still making profit. Again, smart money's down here, so they're not going to want their positions done by the end of the day. So all this jagged. And again, relative equal high as well. They're not that equal to be honest, but see it's starting to come into macro time. TP would be if it can get there. We could aim for this. I wonder if it wants to come down and tap 50% of the dealing range. If not, it means it's very heavy bullish. So yeah, just wait a few minutes. If you want to, you can just like double tap right on your screen, which will make you fast forward. So if I go a bit quiet, it's just because I'm just watching price. What we're doing together. And yeah, I'll show you my other orders as well. So I bought, sold, bought, sold. Is all today. Yeah, to the tick. Looking at relative equal highs here. Midnight price. Sell up into the inefficiency. And if I would have held that, I said I took it at the inefficiency because I'm just looking at focusing the small trades. Again, if I'd have held that with my stop loss down here, could have took the liquidity, resting above here. Smart money, smart money. Oh no. We're looking for some liquidity, we're looking for some inefficiencies. So I'm looking, my eyeball comes down here. Just below that 50%. It's enough to entice people in to go short. Just on the live stream, Dad. See if it can tag 50%. Been offered to go play a game of Crown Green Bowls with my dad at the minute, so I might dash off and do that. But let's just see this trade first. Dum, 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 dum. Order block, which is this candle here. There's another one down here as well. It wants to travel for a deep premium. Wouldn't like to see it do that. Reaction. So I'm waiting for a bullish PD to see that reaction. I'm waiting for the bullish PD array to form, as I'm not at the level confident enough just to enter in here. Inefficiency to inefficiency, trapping in the traders. Notice even on this smaller dealing range, you've got fair value gap, forming at the levels. I think ICT would be impressed. Maybe not impressed, but maybe he would be okay with me knowing what I'm doing sometimes. Let's see. Let's get in on the next entry that I see then. I didn't draw this on after. I drew it on before it went up. I entered, so that would have been a break even already. Again, I'm building confidence to take the trades like that because I'm not used to trading. We're not in the order flow, like that's bearish order flow. I'm not used to changing that state of delivery. And again, look how potential fair value gaps forming around that 0.25 level. So let's get ready to enter. Could have been a bit better. Yeah, it still didn't get it in the fair value gap. And the candlestick should be below. Candlestick really where the entry is. So again, we're trapping people into thinking short. So this one is the fair value gaps. They're coupled together. So you use them both in one drawing and it's below just at 50%. So price often trades 50% of the range, then we'll go higher. So we just come down to get some premium. And again, the drawing liquidity is up here. Then I entered off this better value gap. Let's call the shots. Let's call the shots. I'm predicting what price is going to happen. And I'll admit it when I'm wrong. I'm not going to sit here and lie and be like I'm right every time, because I'm not. But like today, you see me take a win, a loss, a win, a win, a win. So 1, 2, 3 wins, 4 wins, 1 loss. I'm happy with that. This would be my 5th win of the day. Well, we go 4 wins, 2 losses, and we're still in profit. Still profitable. Let's have a strong reaction. And again, if you look at high to low, 50%. Trade into, you don't have to be too worried when it's here. Trading into discount that low to that high. But we wouldn't, if it was extremely bullish, I wouldn't have liked that to be traded through. Just now, like, I'm thinking, oh god, here we go. I'm not like, oh, we're out the trade, but I'm like, oh my god, this isn't as bullish as I'd have liked. Because I'm hoping it doesn't use it as an inversion, you see. That's why your stop loss always goes below the 3rd candle. Always, always below the 3rd candle. You're looking at this like, oh, now he's lost. And I might have. As I say, not right every time. Maybe the issue is I couldn't spot where that was reacting. Go on. That's another loss for me. So is it the case of these with the liquidity now? Is it not going to just do much now for the rest of the day? I have one more go at getting back in the trade if I think it is going up. For now, I'll just accept the fact I was wrong. Relative equal highs. Into premium again. Again, the problem I think I had was I entered too early in the macro. So if you watch when it gets to 3 o'clock, it might start to change its mind again. We don't reach farm for this inefficiency. Whack out everyone who's gone long. Optimal trade entry. We're bullish. Don't want to see it travel down to here. Like into this region. Yeah, into here maybe. Into a deep premium, but no, not down here. If it goes down here, then we're targeting the lows. But I wouldn't like to see that, to be honest, because that's where smart money's positioned. Unless they took their profits out here. Shall I go for it on the down? As I'm practicing, I'm gonna go for it on the optimal trade entry. Not took an optimal trade entry ever in my life, so I'm going to just see if it reacts. My stop loss below here. Just waiting for the right time. Let's do it. Took a buy. It's how you do it. It's Friday night. So 4 wins, 2 losses. Maybe 5 wins, 2 losses if this one goes. How about the reaction? Just a bit early in getting in here. The idea was there. Mistakes were there. And again, like this is now my entry there. Look at that. Again, that little trade from there just to there could have been enough as a trade. Ultimately, we're bullish on the day. Smart when he's down to here. Got a little fair value gap forming here. Want to see that stay. Want to see that. If trade 2, I want to see it going through. So as you go up now, leave my stop just below break even. How everyone would like assume that's going down. It's like perfect to the tick. That optimal trade entry. I want to see it get above there. It's nice. Watch all the whole video. I will make mistakes, but ultimately you recover from your losses quite easily when you having big risk rewards like this. And there we go. Galactica reaction. Consequent encroachment. Mm, 10 seconds. Let's see the candle bodies. Look, I'm just looking at this little overlapping candle. So I want to use that. Let's see how it uses it. Either one way or the other, we'll use it. Down to this volume imbalance. I want a strong reaction, but it hasn't managed to get down to that volume imbalance. And there you go. I was waiting for. Stop to here. So first optimal trade entry, one that I've took, to be fair. Look at that. I mean, you could just target here. I'm going to ride it through to the end of the day. See if we can target into this liquidity. So I'm going from inefficiency, optimal trade entry, the order block. Trading when prices coming down, you have to be confident. And again, macro time, 3 o'clock. So this will be another win. So we'd have had, I can't remember what I said now. A win, here to here. Had expecting price to go higher, missed it, took the loss on that. So, but the win was much bigger than the loss. Then I had this trade down to here, framed my liquidity slightly wrong. Again, bigger win to loss. So that's one win, one loss, one win. Win, win. So 2 wins, 3 wins, 4 wins, 5 wins, 2 losses. 5 wins, 2 losses. But this one seems my best win as well. Just a lovely reaction there. I'm just trading in line with smart money. Very, very strongly bullish. So this would be a model, what you call a model, optimal trade entry model. So I'm working on using different models like your liquidity sweeps, inverse fair value gaps. I'm trying to learn it all, to be honest. Like this was fair value cap down to liquidity inefficiency. Sorry. Um, 2.74 to 1. And then this one, the stop up. This one here, 5.6 to 1. I'm going to ride it up to here, and that'd be a 9.24 to 1. Who else is live streaming that? Who else? Who else is saying ICT concepts don't work? Yeah. Yeah, they do. Um, Look at that. If I had more than one contract, if I had more than one contract on, I'd be taking partial here. But I just want to ride it through. So retail, we're looking at this as support, as in like resistance. So they will think I'll place my order to sell at the 0 level, whereas in reality, smart money is going to just trade up through that, then react off something, liquidity, or react off the inefficiency above, or in my case, what I believe, come to this inefficiency or this liquidity. Okay. Um, I want to try and teach the basic concepts. As this, I'm gonna probably do like a video or a live stream where I just go through everything without doing like live trades and stuff. But even if you targeted here to this look this with to target the within here, that's a 4.39 now. So that's enough really. It's only because I'm practicing. If I was trading with an Apex account and I'd say I had 200 risk on, make it 800, I'll probably play that. Um, but I'd at least like sort of have my stop loss like here below this inefficiency if it wants to use that support. Okay, let's do that. Lock in 3 to 1. So I mean, like with the precision you can get off, like, a lot of people on YouTube, a lot of people on live streamers are trading off the friggin' 5-minute chart, like, because they don't know the precision. They don't have the precision to be able to trade the 1-minute chart. That's why they trade the 5. Yeah, look at the 5-minute, look at the 15-minute, but they don't have the precision to trade small time frames. That's why they're not doing it. And I haven't even, this is me not even looking at the 15-minute and the 5. So maybe we should just have a look, see what's happened. So 15-minute fair value gap. But you wouldn't get that entry spot on, would you, without being on the 1? You won't be able to see the detail of the manipulation lower, the macro time and stuff without being on the 1. Let's go to the 5 again. Yeah, same thing. It's a little bit better on the 5. I like looking at it for the broad overview because sometimes you can get you're too looking at every little candlestick too much. And there's tagged liquidity. Okay. So I'd put get out here, but I'm just gonna see if it can hit my ultimate target for the 9 to 1. So you have a breaker now. You've got a high, low, higher high, which is just forming in the next 20. Well, higher high here. You've got the inversion fair value gaps here. Price is reacting off here, doesn't want to come lower down into the breaker. Thank you, ICT, for giving me matrix vision. You just got to manage your risk well, because if you don't, then you kind of lose everything quite easily by being wrong twice and you're losing half your account. You don't want that. And again, like, look how many times in the day I can trade. So if you don't understand the markets, you can trade PM session like now, and you can trade lunch. Admittedly, I had a sleep, so I didn't trade this. I had a nap, and then the London, the New York pre-market kill zone. So London kill zone. And again, it's just going to manifest these highs to look like it's for people. It's going to go down. So I'm being very transparent with the trades that I took today. But I do spend a lot of time in front of the charts because I'm very dedicated to practice and stuff. So yeah. It hasn't reacted off the liquidity, there's no strong reaction off it. It hasn't even meaningfully gone through it, so you can expect it to go up. I mean, ultimate terminus, if I was being greedy, would be here. And that would be 11.5 to 1. So on your Apex account, you trade 200 quid and you make it for two grand. But again, brave to enter on that down. I'm just gonna target the liquidity at the inefficiency. So that gives you an X-ray view as long as you understand the concepts and practice them. There we go. So it could stop me out now. So I'm just take that. Ultimately, sometimes I know where I'm going, but sometimes I do get hit with my trailing stop just because I'm locking in profit as we move. I'm more about trying to get that higher win rate at the moment because I've been taking too many big trades and taking losses from trying to aim too high and stuff. So I'd have took that at my apex. I'd have took there. So I think what probably could happen as well is it could hit this bullish breaker. So like surely my stop really should be about here. But I just don't want to. I want to see it react. But the thing is as well, looking at time, we haven't got much like half an hour of the session left. So again, I probably again would have took profit here. But I'm just trailing just for the fun of practice. So this is my trade. Look how much more profit you can lock in if you do manage to hold the trade. Oh dear. 5.5 to 1. Crazy stuff. And ICT says like you want to aim for 3s to 1s, 5 to 1s when you're practicing as you're a beginner. There we go. Nice inverse to fair value gap now. We're holding it out because we're confident. So here, getting annoyed at myself for targeting off the 50% level. Price wanted more retracement. Again, it's just like creating that retail mindset. Want to see a push up on the next candle, ideally. Don't really want to see it drop down anymore. Because my stop could be not hit then. My like fake, my fake stop, my 3 to 1. So 25 seconds. I want to see this candle flip. 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. So that's like a invisible candle. See if we can do it on this one as well. Flip up. So you ignore candles like that. Now we get the flip. If you're looking at a small time frame like 1 second, relative equal highs, liquidity sweep. See how I'm looking really micro. So you can expect price to trade up through that if you're looking at 1 seconds, scalping or whatever you're doing. I don't have that subscription from TradingView. Okay, so again, we're just in a holding pattern really. Teaches that there's like 4 macros within the final hour, which 3 till 4:15. If anyone knows like, how to get more views and things as well, and like, wants to give me a message, I'd really appreciate that. I'm not all like great at knowing how to get more viewers and stuff, but like I think this would help people trading and stuff to learn. If you're a beginner, like I will teach you. So it could touch the breaker and hit my stop and then go the opposite direction. But I'm just gonna leave the stop in there just for the sake of the video, even though I'm confident it wants to go up. But coming to the last hour, so there's not much left to do. So is the stop gonna get hit? Is it gonna react with the breaker? So just had it. It's very sensitive to this candle here. Let's highlight it. So like that would be very it's just like ideally if I was trading this like and I was like super confident my stop would be below this one, below the breaker. But again, just learning about stop placement, how much you're willing to take and lose if you think you're wrong. Just tagged. Mm, nice. Nice reaction off the breaker. And again, the stop placement wasn't necessarily wrong, it just didn't allow for much room. Quite tight. I've gone quite tight on my stop here, which is okay because we're already up in profit. So, and we're coming towards that final close of the session in the next 30 minutes or so of regular trading hours. And also I say that because prop firms and stuff, you have to be closed by 4 on your challenge accounts, most of them. So I don't tend to look past 4 o'clock, to be honest with you, 4:15. Yeah. Notice how like close my stop is. Tag that liquidity again. So move my stop up a little bit more. It's creating a fair value gap. And if we get the fib out, where the fair value gaps are forming, 25%, 50%. It's algorithmic. So I've caught the very low of a dealing range that's going to be formed. That's the way I think in my head. I'm predicting where it's going to go. So I'm using measuring gaps. I'm using this to assume that I'm right. Because it's lining up with my things that are happening in the future are lining up with my future prediction. So it's, and again, if this stays open, that's a measuring gap. Yeah. Which you see at 50%. So measuring gaps, fair value gaps that don't get traded to, you typically see about 50%. They can get pushed into. So now currently at 6-1. And so if you're late joining, you're not sure what you're looking at, optimal trade entry, which I have. I've just got this predicted dealing range on. And again, it's more than some daily people earn in a day. Again, so this left open. At 50%. Just honestly, people who think ICT doesn't work just haven't learned ICT concepts. So don't think scam. If you go on like Words of Wisdom, Chart Fanatics, people who've made the highest amount of prop firm payouts, they're ICT traders. Yeah. I mean, I've tried algorithmic trading and I'm confident that this is even better than that because you can't code this stuff to this precision level. You can try, but I didn't manage to be able to code it into didn't manage to code it into anything. It's too complicated to code. I'm not saying it's too complicated to learn, but it's too complicated to code, in my opinion. Else, everyone would code it, wouldn't they? If it was that easy. And that's why you get all the algorithmic traders saying ICT doesn't work, because they're trying to code fair value gaps, and like without knowing where you are in the dealing range, where your bias is, what time of day it is, and you're just coding random fair value gaps because you've seen a market structure shift, for example, here. Yeah. So when you talk about coding, yes, there are codable strategies that work, but I just don't believe they're as good as this, which is why I'm back to manual trading, because after watching certainly the videos that he's done, there's just too much evidence, conviction that ICT trading works. And this proves it to you live stream, and have no viewers and no one's watching this, which is madness. Because look at what I'm showing you. Showing you how to make money and not being a scammer, not asking for anything. All I want is to help people learn, because it's like the most valuable skill you can have. I love teaching. How this fair value gap didn't get traded to, and I called it as a measuring gap before it happened. So I was a little bit doubtful, but I did enter. Look where I got the entry. Let's remove this now. For that. Do you think this recovered my one loss or two losses that I've had today? Hell yeah. Hell yeah, it has. My dream is to like earn a load of money from this, and then have teach one-to-ones, one-to-one teachings, help people, one-to-one mentorships, things like that. We'll just make videos and just have a group chat and stuff like that, to help people learn. And yeah. So my stop loss was below this liquidity. Wonder if another fair value gap will form around here. And you've actually moved the stop up now to the measuring gap. That perception. You want to get to the point where it's boring because it's quite exciting because I'm still in the new phase of finding this profitability that I'm in. Um, I've spent time making the making mistakes like everyone else, just seeing markets which are just fair value gaps. Let's enter liquidity sweeps. Let's enter. But there's a lot more to it than that, which is why I'm showing you more things and how you use them all together. Let's just see what's to the left. Nothing other than these highs. Smart money is down here, so there's no reason why we can't take it. It'd be funny that, wouldn't it, if fair value got formed here. Not saying it's gone in, but it would be nice if it happened. So it's just tagged into liquidity. I would take profit around here as well as another potential take profit. If you have 3 contracts, you go 1, 2, and 3. Yeah. Wins in the chat. Ah dear. What did I say about the fair value gap? What did I say? Just say. No, it hasn't. Is there a little one? No, it's closed it, to be fair. Did look like it was going to form one then, didn't it? It's just reacting off this liquidity. So yeah, um, let's just move the stop right up, lock in profit. I'm just happy with what I've got now, so I'm just trailing up. Okay. Um, Again, the target, don't, it's creating that double top this high for liquidity purposes. Again, you have to, it doesn't always happen all the time where it runs straight up. Like we've just got very strong conviction of where it's going next, which is the first element of what you need to know. Where is it going next? Where was smart money? What time were we in? New York PM session. Start to get interested around 1:30. The first presented fair value gap used as well. I'm trying to combine all his concepts. And we've got about 15 more minutes. Still bullish. I really want a fair value gap to form, can't lie. Stream quite a lot, so just keep watching streams and stuff. And that should take me out now. Oh, no. The wicks don't do much, they're just the do damage, so it could have wicked me out. It's where the body closes that really matters in your trading. So that's what the story is. The wicks can tell you a lot about what it's reacting off. So the wicks are key as well. Mm-hmm. Mm-hmm. And again, I'll try and use, if there's another fair value that forms, I'll use that as projection. One micro, £163 up, dollars up. You always want to get away from the prop firms as well. Like, I'm only using the prop firm till I trust myself to trade with live capital and save up some money from using the prop firms and scale my trading. Trade with live and prop firms, I'll do both. I love trading as well. Like, a lot of people don't have the passion for it, whereas for me, it's a massive passion. So, and I love testing my knowledge and stuff like that. Um, yeah. Coming into the final macro in the next 3 minutes. Notice how my bias is bullish, so it only take long. I'll sell it up, so. And like, I hope this is like a fair value gap. I can sort of use it as a projection in price. Just gotta have a bit of patience with it as well. Like when you're watching price. I appreciate some of these videos might be boring and you might not find them that interesting. When you start seeing this happen every time you're on, or sometimes that you're on, then there's a big incentive for you to stay on this and listen to me. Or go and listen to ICT as well and learn it from him and me and whoever else teaches it. And I'm just going to move my stop here. The final last 10 minutes macro. I just closed the position. See what my profit was there. And again, I've just hit the liquidity reaction off, which is why I've exited it. So that's 8 to 1. $8.39 to 1. And that took there. There. Sometimes the final 10 minutes can just be a bit wild and go in the opposite direction, which is why when I've seen that rejection. But again, if it reverses, that's great. I just took my profits there. So you see fair value gap forming on the 0.75 level. So it might come down, but ultimately will go up, in my opinion. Unless we're just creating relative equal highs, engineering liquidity for tomorrow. Let's just see what happens till 4 o'clock and then peace out. Dog's going mental. There you go. Fair value gap forming. Predicting where fair value gaps form before they happen. There's the one on the 7.5 level. So I'm drawing that up. Something like that. And not 50. You can enter that to go there if you wanted. Would have been a 12 to 1. You just be content with what you get as well. It's got 5 more minutes and then I'll be off. Yeah. Listen how I said to you, fair value gaps form on quadrant levels. 0.25, 0.5 measuring, that one doesn't get traded through measuring, 0.75. So what you're trying to do is line them up. So you want to be sort of like that. But again, like if you haven't took no profit in there, then something wrong with your greed levels. Stabbed up. Most of the people who've gone short have now been taken out if they didn't take any profit down. There's still a little pool here of liquidity, but this could be engineering liquidity for tomorrow. That's why you use this area as you take profit. You're much better off doing that. See how I took mine around the time where I thought potentially could reverse, but yeah, ultimately it'll go up there. But like we're in the final hour of final 10 minutes where you've got end of day macro. So yeah, and again, like if you use this as an entry, you're at a premium price, so it's not optimal. You want to enter a discount. So here, is it traded into the breaker? Yes, but not really here. Unless you're super confident it's going for that by the end of the day, but it's now engineering these highs. So it just trades the inefficiency there. Which is why, where did I get out? Here, you see. What's that in the inefficiency? Yeah, low. If you look where I got out on my 8 point something to 1. Bang on the low, that inefficiency. Yeah, it took another stab up there, couldn't reach for the highs. So now we're looking for lower prices. Makes sense. And I'm looking at these areas here. These targets should trade down. Anyway, that will be the end of this video. If you found that helpful, send a comment or a message if you want one-to-one help, or if you want, wow, that's a nice drop. If you want more videos, just put what you need help with and I can make videos on that, or just comment in chat and stuff when I'm live streaming. I live stream every day. So yeah, let's finish off. An 8.5 to 1. Not to brag or anything. Right. Have a nice day, everyone. I'm gonna listen to some music and yeah, do my analysis for tomorrow and when the markets close. So yeah, have a nice evening.